Hey, good morning, guys. This morning I had to make a quick phone call. Thus I didn't get to um, set up an introduction and kind of ruin my chances of trading today too. So give you the preface on that. So yesterday I was consolidating my positions. My like short-term swing positions, kind of like roughly estimated to like a week to like a few days occasionally. And I was just consolidating, getting all the positions, taking profits, cutting losses, this and that. And what I had decided to do was on this Citigroup pullback yesterday, I had bought up for I had bought a few more contracts um, to average down the cost for another move up. And what had happened was during that last 4 hour candle, it didn't get up where I thought it was going to. I thought it was going to bounce off this 65 and hopefully recover at least above the 50 EMA and bounce off the 50 EMA. My reasons for those is because obviously interest rates going up still, which is good for banks. But what had recently happened, I think Goldman had their report yesterday, and they were citing huge expenses towards their labor efforts. So like um, hiring people, was adding up their costs, and and usually on top of those, most banks are then probably going to see um, similar calls, guidance calls, and all of that, saying citing the inflation of wages or this and that, maybe still having a hard time finding people, whatever the deal may be. So kind of in that last candle, I saw it wasn't coming up and staying above the 50 EMA, and I was thinking, well, there could be a larger pullback all the way to the 200 SMA or something. That would be another like $2 down practically. So I was like, well, I could always get in at a better time, but I can cut my loss. I had like a 150 loss on that swing, um, but I was like, I can cut it. I'll get back in lower if I need to. So I wanted to cut that, but then on top of that, I had set up a swing trade for you guys in my video, or not a swing trade, sorry, my day trade video for yesterday. This was the action. I had gotten in around here, and I was hoping for a move up again. Yesterday, energy was the only sector that was up in the entire market, pretty much. And so I was banking on Exxon being an energy company, and I was up $60 at one point, and then I said, okay, let me just leave it be. I'm gonna let it run through the day, and I said, okay, I'm gonna leave. So I went to go work out and just kind of rushed my eyes from the stock market. My eyes have been just dry lately, staring at the screen. But then it did all this. By the time I got back, we were like around here, and I was like, oh, okay, we were down like 100, over 150 probably, and the consolidation here, I was like, well, it'll probably move back up. So I was waiting for this kind of like a big cup and handle. So here's like the cup, and here's a little bit of a handle here. In this case, in pre-market or aftermarket, it's already came back up, but um, it didn't make the move earlier that I wanted to see. I wanted to see it do that correction and up there. So I ended up getting out as after break of this like 73 level. So I got out like right here as it broke the 50 EMA in like the last 30 minutes. So I was like, okay, I'm fine, I'm out. So I took a loss yesterday on $55. I didn't post that video just because it was, again, it was a very drawn out day. Um, it was really slow. It was really kind of boring because it was like a whole video where in the midst of while I was waiting for this, when I came back, I was just doing some ranting. It got to the point where the video got really dry and just kind of boring, and I kind of fell off the interest of that video. So I ended up not posting that one, but I took a $55 loss on that one. But then that closing that one off at the end of the day, which I realistically should have maybe just held to swing to tomorrow, which is today. Um, I totally forgot that I had averaged down on my city position, when I averaged down on my city position, and then when I saw it not breaking that 50 EMA that I hoped it would, I got out. So I also had exited my position here. So then, with that 1 day trade rule, and I only had 1 day trade available, it then flagged me as a pattern day trader, which then it just says, "Hey, if you're going to trade as like a day trader and opening positions and closing positions in the same day, and the limit is typically three. If you don't get like if you don't meet the minimum requirements, then hey, you're going to need to meet the requirement." So then it flagged my account and said, "Hey, you're going to need to input the rest of the remaining difference to get to the $25,000." So then I had to make a call this morning when I logged in because it showed me the message, and I had to call in and I had to just tell them, and they give you one free, they give you one freebie, and they'll like remove the flag, and they'll say, okay, yeah, I get it, mistakes happen. So I had to make that call, and they let it go. But I can't trade today, so I'll have to wait for them to. It needs to get approved or something, and then the next business day, I'm assuming they will free up the account. And the meanwhile, I do have a few positions that I will let you guys in on. So, IWM, Russell 2000s ETF. Actually, let me show you this. So here's my swing trades that are open right now. IWM Russell's 2000 ETF. We have, you can kind of see there was a bounce, right? It's been going sideways entirely, right? And if you kind of break it down, and the line I have my cursor at right now, that's about that's about like the mean of this range, I would say, or at least the median, right? And we are well below. And if you look at these candles that had bounced on this price level area before, it's bounced right back to make a doji, a nice bullish bounce back, a nice hammer, bullish hammer bounce off this price line. And so this one yesterday was a very bearish, where it actually broke the line, right? Just barely. And we also have this 200 SMA that the price had tried to bounce off of, right? You can kind of see where instead of doing the sideways action, they started actually leveling off of the 200 SMA. And then it broke up, tried to make new highs, got rejected down, and now we are under the 200 SMA. So being under the 200 SMA isn't great. Neither is the 50 being under the 200 SMA. It's technically considered a death cross when the 50 EMA crosses the 200. So kind of a bearish indicator right there. But we're waiting for now the break of this 208 level that is holding it up pretty well. So RSI is well below 30, not quite in the oversold, which is nice because then we can see a nice rundown. And here is what we did yesterday. So we got in yesterday. When I saw that, I think it was around noon or right before I had left. I had opened a position earlier in the morning. And when it came all the way down to this, you can see there's a double bottom right there as it tried to come back up, but could not break this 210 level, which is kind of like that opening range in the opening range zone here, which then it held, went back down, and broke the level. Pre-market, it was, post-market, pre-market, it was under the range, but then it came back up. So we're holding 4 contracts at $47 each. We're just swinging this a few days, and I really want a break today because I'd like to not let theta eat away any of my profits. But there was a bit of a bounce here in the opening morning, 209, right? And there's a bit of that resistance up here in all these price points. So I'm hoping it breaks downwards, comes down, and possibly fills this somewhat of a gap at 205.88. So again, it has to break this level again, which it could do. Did it yesterday before market closed, but will it have the pressure to close down below it now? So we're watching that a little bit. we're only up like $35 on that so far. And our other position is Pfizer. Take a retracement of some sorts from, let's take this bottom. 50, we have this 50 mark, we have the 61, and we have like the 78.6, right? If we can get any of those underneath, I mean, my first profit taking would definitely be probably around this level, because we have this top of, these touch points right here. And then we have touch point here and the bottom of here. So these are all some good points. It'll be psychological levels that I'll keep in my head. But yeah, and then you can also see this supporting line where it bounced, right? Made this run up, corrected down, bounced off the 200, and then broke below the 200. 50 is right at the 200 right now, and it'll probably break through pretty soon. When this price breaks below the this supporting trend line now. You can see these bounces are pretty, quick touch go. Now this it's sitting here a little bit, and now you can kind of see this inverted hammer, that it's essentially the buyers pushed it all the way up, but the sellers push it all the way back down and then some. That's essentially what that candlestick means. So now if this can make a newer low, if it can break 73.4, which is a pretty positive, well, not positive, but good for our position. If it can break below and make a new low, that'd be indicative for anybody else who's in a position to either maybe take their stop loss if they're long, or confirm a short position on the way down. So we're seeing a breakup pattern here. You can kind of think about it as here's a shoulder, here's a head, and here's a shoulder. If we think about it as like a diagonally orientated head and shoulders. So maybe we can see an additional run from, whatever this might be, 40, let's say 45 to like 50, just barely, like $5 move downward. So maybe we can see a 53 to 48, something like that. So those are our two main positions and on this account. And that's what we'll be watching, IWM and Pfizer. Hey, quick update, guys. I had mentioned earlier in the video that we had this IWM Russell 2000 ETF swing trade going into today. And here's how it had played out. Remember, I explained it just broken this 208 level support. That was very important. Gapped down, came back in range in the beginning of the market, and I had said that I'd like a breakdown below of the 208 again, just to maybe fill this gap. And we ended up seeing that I had taken two of the four out at around this 207.5 level. And then I had proceeded to take the third contract around this 206.8 level. And then the last contract I had filled out at like 206, actually it was like 206.5. I ended up scalping $137 off of those contracts swinging from yesterday and today. So we had lost about 4 contracts. We had lost just shy of $80. We did take that $80 loss in theta, but luckily for us, we still ended up green, and we made $137 off of a position that I believe costed us just under $200. So that's, almost it's almost a 75% gain on that, return on that trade. So that's great. But otherwise, I will see you guys tomorrow. Thank you.